Welcome to Partnerships for Profit, the podcast where we bring you inside the world of joint ventures, strategic partnerships, and powerful collaborations. Whether you're looking to expand your network, find new referral partners, or scale your business, you're in the right place. Let's get started.
Welcome back to another great episode of Partnership for Profits. I feel like I just saw you guys yesterday. It's because I was podcasting yesterday. But today, we've got a great guest. He is a master connector in the world of startups and venture capital. Scott Kelly is the CEO of Black Dog Venture Partners, the founder of VC Fast Pitch, and the host of the Emerging Managers podcast. We're going to talk about VC Fast Pitch and Black Dog Venture and all that good stuff today. Scott, I'm really glad you made some time to join us today, man. How you doing?
I'm doing great. Thanks for having me on. We'll appreciate it.
Absolutely. So I don't know a lot about the world of venture capital, so I'm excited to talk to you. I mean, I know what VC is, and I hear about, I'm a venture capitalist. And like, I think some people, when they hear that term, they're like, oh my gosh, it's, the scary venture capitalist guy. But I need to be educated. So I'm glad that you're here to kind of give me a better picture of what that means and what it is. So before we get into that though, tell us a little bit about yourself and about Black Dog Venture Partners. Tell us about VC Fast Pitch. Just kind of let us know what's going on with you.
Sure. Well, I've been doing this for 35 plus years. I've been a deal guy. I've been on both sides of the transaction as an entrepreneur, looking for capital and an investor deploying capital. I started out on the New York Stock Exchange in the early 80s, moved to San Francisco, worked as an investment banker from 86 to 93, taking tech companies public. 93, I first got the entrepreneur bug during the dot-com boom and had 3 companies that successfully grew and exited between 93 and 2000. Retired briefly. I tell everybody that was my first unsuccessful retirement. I moved from California to Arizona, started to raise a family. And then 6 months later, I started another business in sports and entertainment. Sold that about 6 years later. And that's where Black Dog Venture Partners got started. And what was happening is a lot of the larger later stage venture capital firms didn't know where to send their earlier stage companies. So it became me. And so we worked with early stage technology startups, consumer product companies to help them prepare for investors, get in front of investors, help them scale, grow their business, and then eventually help them exit those businesses. So since that time, we facilitated about $5 billion of capital raises, 30 companies exited in addition to my own during that time. And we built an investor network and syndicate of about 14,000 investors and, a network of partners and entrepreneurs that numbers about 40,000 that get our newsletter. I launched VC Fast Pitch about 14 years ago. And honestly, I went to a really bad pitch event and it really inspired me to do it better. So, VC Fast Pitch, what we do is we democratize the process for entrepreneurs. We don't have a long, lengthy application process. You get in, and what we do is we vet the investors to make sure they're qualified investors, listening to entrepreneurs pitch. And we've hosted close to 70 events over the last 13 years. We do them monthly online. In fact, we will have an event today in about an hour and a half online. And then we host them at venues around the country. And we've raised about $130 million from those events. And then late last year, early this year, I launched the Emerging Managers podcast, which was to allow lesser known venture capital firms to get exposure to potential limited partners and investors. And, there's 3,200 plus venture capital funds, and the vast majority of them, 90% of the capital goes to the top 25 or 30. So we really want to cast a light on managers that are lesser known, but are getting better returns.
So a venture capitalist is like, give me the explain it to me like I'm a 5-year-old, right? What does a venture capitalist do?
Yeah, well, I think the easiest way to explain what a venture capitalist is they are the private equity or private company equivalent of a mutual fund. They have other people's money that invest in their funds, and they will deploy them in various early stage or later stage privately held companies. Okay. And I think you really need to understand that raising capital isn't just venture capitalists. They get all the press. Right. But there's a network of millions of angel investors and high net worth people and accredited investors and other people that make early stage and later stage private company investments.
So if you got a company a private company that's just growing but you need, you have a great idea, like you got a great concept and it's, you can make it go, but you need that capital. How do you go about finding those investors? What's the trick to get those investors, get in front of those people? And it sounds like VC Fast Pitch is a great way to do that, but if you are a new business owner and you've started this new business and you need to raise capital, what's the process to find those people?
Well, I tell you, the first thing is you need to start 6 months before you need to raise the money, because you need to build a relationship and a network. There's a lot of online resources, the LinkedIn. You can do searches and find the investors. You can use services like Crunchbase and AngelList and other services to research investors. But the key is you need to spend time doing two things. Build a list of investors that are within your industry and your stage of company. But then after you build that list, you need to build a relationship. And that takes time. And what you don't want to do, and I know this question may come up, is that, the things you don't do is you don't find the title VC or venture capital on someone's LinkedIn profile, connect with them, and then immediately shove into their DM your pitch deck. That's a big no-no. But it's about building a list, building a targeted list, and then building a relationship over time. I tell a lot of people, the best way to get people to give you money is not to ask for money, but ask for advice. Spend some time asking for advice and building relationships.
Right. So what, so that's the trick there is to reach out and say, hey, I need your advice on, I see that you're in this world. I have this business. I'd love to get your advice on what we're doing. And
you could start with that. I mean, sometimes you may start with giving something to them first instead of asking something. If they post some really good content, share that content. Say, how can I be helpful to you? Offer to, if they host events, offer to volunteer a check-in. Do those kinds of things. It's much like, really any career you want to get into. You've got to spend some time paying your dues before you earn the right.
Right.
And that's very similar, in this case too.
That's funny, because that's really what this podcast that you're on right now. I mean, that's really the whole purpose of this podcast. We have an audience. It's not massive, but that's not really the reason why we do it, right? We do it to build relationships and to get to know people and to make connections and see what might happen as a result of having someone on your podcast. Because I want to have you on here and I'm giving you this platform and making this about you. So it's right in line with, we're not looking for capital. Obviously we're looking for clients, but it's the same deal, I guess, right? It's kind of it's sales ultimately, is it not? When you're trying to get investors in your business, you're selling them on your business, right?
Absolutely. It is sales. And like sales, it's a grind. You need to have a lot of bullets in the gun, because you're going to miss a lot of times. You're going to hear a lot of no's. You're going to have to learn how to overcome objections. You're going to have to learn how to pivot and do your homework with your prospective investors. It's sales. It very definitely is sales.
So so a venture capitalist has got other people's money and they're picking where they're going to invest that money, which businesses are going to invest that money into. How often is it a success versus how often do you not get that money back? Like what's the ratio on that kind of thing?
Well, that's the rub. I mean, venture capital is very high risk. The reality is it's kind of like being in baseball. If you can bat 300, you're in the Hall of Fame in both.
You're an all-star, yeah.
So the reality is the vast majority of venture capital investments go to zero. It's changing now. I mean, obviously, depending on the firm, and that's kind of why we launched our podcast, is that these later stage, and these larger venture capital firms, they're making bets. They're hoping that, there might be, out of 10 companies, there could be 8 to 9 losses. And it could be 1 or 2 that get 100x return that make up for all the other ones that lost. Right. So it is a high risk game. And because of that, as an entrepreneur, you need to be in the mindset of a venture capitalist or an angel investor. You need to let them know, okay, how can I avoid losing money? And how can I help you do 2 things? get a return of your capital, and get a return on your capital.
So the VC groups, how much do they have say in like how the business is run that they're investing in, or are they just kind of like, here's the money, go do your thing?
Again, that depends on the investor. Now I will tell you, understand something. If you're an entrepreneur, if you get an investor, you also take on an opinion, and that is something that you've got to really think deep down whether or not you want to take that money.
Right.
Because again, it could come with strings attached. The things that you need to understand that these are good questions when you're doing your due diligence of investors, because some of them may want a board seat. Some of them may want some preferential treatment in terms of liquidation and voting rights. It really depends on the investor themselves. But at the very least, once you take someone else's money, you have to be accountable to them.
Right. Okay. So talk to me a little bit, Scott, about the VC fast pitch experience. So someone who's never been, what's it like to walk into a fast pitch event as a founder? Paint the picture for us a little bit.
Yeah. So we have companies, they do a 5-minute timed pitch to our group of investors. And either they're in the audience on an in-person event, they're on Zoom call, in our online events like we have this afternoon. And we do some coaching for them. We make sure they're coached. We make sure they have a viable presentation deck that has some key components that investors want to hear. What's your problem you're solving? What's your solution? How do you make money? Who's on your team? And how much money do you need? And what you're going to do with the money? As the basics. But then, I tell people, this isn't like that famous TV show with all the celebrity judges. What's it? Yeah, thank you. But these events, the goal is not to get someone to write you a check right away. Has it happened? Sure. The goal is to get a second chance to tell them more. Get a meeting, get a phone call, get a Zoom opportunity.
Okay.
Those are really the goals. These are not typical one call closes. So that's what we do. We give entrepreneurs an opportunity to get in front of people they never meet in person or online because they just can't get through. Fortunately, I've had relationships with these people over 30 years. They come on the calls and they attend the events because of our relationship. So, but again, you get your shot to get a second opportunity.
That's so funny because I have an acting background. I'm an actor. I've been in marketing as well, but I've been acting for 30 years. And when you go and you audition for a play or a film or a television show or even a commercial, your goal is to get a callback. Not necessarily. Sometimes you might book the role right then and there, but ultimately you want to get a callback so they can get another look at you and narrow down who they're wanting to cast. So it sounds very much the same way. And, the agent's role is to get you in front of the right people that are, with a role that makes sense for you so you can book that job. It's funny that's what that's not. It also sounds a little bit like speed dating. Is there kind of a correlation to kind of the speed dating?
Somewhat. I tell entrepreneurs they should have 2-3 presentations ready to go. A 1-minute pitch, a 5-minute pitch, and a 20-minute presentation ready to go at all times.
Okay. And you're helping them set that up, helping them create those versions.
We do everything. We work with these entrepreneurs from creating their pitch deck to giving them pitch coaching and then put them in front of the right people.
Okay, cool. So the title of this episode is about how you connect founders with capital. So what makes your model so effective compared to the traditional fundraising routes?
Well, I think the difference is that, as I mentioned before, you have to build these relationships. I've built these relationships over 30 years.
Mm-hmm.
And so I know what these investors are looking for. I know what their industries of choice are. I know what stage and what the size of the checks they write. So I know them based on doing countless deals with them. So I think, can you do it yourself? Absolutely. Can I fix my own roof? Absolutely. I'm not going to. So I think, entrepreneurs need to make a decision is to, I'm a big believer that if you're an entrepreneur and you're a startup, if you don't know something, you can take a lot of time learning it, or you can bring people on the team that already know it.
So you've seen a lot of pitches over the years. Tell me a story about a really bad pitch that you've seen that's where you're thinking, man, this was.
Yeah,
You don't have to name names, but I love stories.
I've got a good one and a bad one and a good one. So this it only happened once or twice, but the first time it happened was shocking. We were doing a venture event, it had to be, God, maybe 12 years ago in Phoenix, and someone was on stage with probably 50 investors in the room, and they took out index cards and started reading from their index cards. This person got 30 seconds into it, and investors shut him down. Say, look, if you don't know your business enough to tell me without index cards, you have no business being here. And so that was a absolute train wreck and a disaster.
So you hadn't memorized anything. Well, tell me one that worked out really, really well. That was kind of surprising, or a creative pitch that you've seen that was kind of off the wall.
I'll tell you it's probably the most. It's the success story I like to talk about the most, because this was two brothers that started out as entrepreneurs with no money, and our process led them to becoming very large venture capital firms themselves. And there's two entrepreneurs, the Holiday brothers, and they came and they pitched for 1 minute at my event. And during lunch, they had lunch with an investor. The investor invited them up to Menlo Park, and at that dinner invested $270,000. A couple of years later, that same investor led a $3 million financing round for that company. A few years after that, the company sold for 9 figures. And now those people run what's called Space Station Investments out of Utah, which is an investment company that has literally hundreds of companies in their portfolio. So they went from being a starving entrepreneur looking for money to a leading venture capital firm making
investing with other people.
Yeah.
Very cool. Very cool. Those people worked with you, those brothers worked with you.
Yeah. And, we're Tim Holiday and is a friend of mine to this day.
So what's the most common mistake you see founders and entrepreneurs make when they're trying to raise capital?
Not researching the investor. And I mentioned that before. I think this is, you really have to understand a couple of things. You're going to get a lot of no's. There's no question about that. You will get virtually hundreds of no's. But you can improve your results, improve your opportunities if you make sure you're pitching the right investor. What I mean is, don't go out and just, like I mentioned, pitch an investor because they have title investor. Make sure that they're investing in your industry. You don't want to pitch a biotech investor on your software company and vice versa. So right. I think, and then you want to make sure they invest at your stage. A lot of VC funds won't even look at a company unless they have X amount of revenue already. So you may need to find angels or high net worth or friends and family that invest in pre-revenue. So I think that's the biggest mistake, is they don't start from the beginning. And they have to understand that we mentioned this is sales. So sales is getting the right prospect that have, 1, the interest, and 2, the ability. And I think a lot of entrepreneurs just take a buckshot approach. And sometimes this requires, a laser beam.
Got it. So, you've been doing this for a long time. So where do you see VC fast pitch and venture capital in general heading over the next 5-10 years?
Well, from this, on the latter, the venture capital industry is changing dramatically. With the advent of AI and other technologies, companies can go to market faster with less money. Instead of hiring 50 developers, you can hire 3 project managers. And so I think that's changing how investors look at companies and look at the need to raise capital. And you're finding other players like family offices and private equity firms becoming venture capitalists. And you're finding venture capitalists becoming private equity firms. So they're, and a lot of that had to do with, over the last several years, there's been a lack of liquidity, in the public markets for companies. And so they've had to find other tools. So I think from that standpoint, the venture capital industry is continuing to morph and change. As far as VC fast pitch, what we've been doing over the last probably at least 10 years, but even more so now, is honestly, I go to a lot of companies and they say, look, do you really need to raise the money? And if you don't, let us find some other ways for you to fund your business. And I tell them all the time, the best way to raise capital is to sell your own product or service. So
Yeah.
we brought in, we do webinars, several times a month on growth hacking, on other ways to build your business, on grants and non-dilutive capital, debt financing. So, what we've done is we've become, I tell everybody our motto is to solve problems and create opportunities. And, sometimes that's with money and sometimes that's with effort.
Right. I think the hard work, there's no substitution for working hard and putting the effort in 100%. Well, let's shift gears a little bit. Talk to me a little bit about your podcast. Tell me how that experience has been. Well, you said you started 4 months ago.
Yeah, I started back towards the end of the year. I had, I was encouraged by a business partner for a number of years to start a podcast, and frankness, I just didn't want to have another podcast like everyone else. So, but there was a really interesting article that came out towards the end of the year that there are roughly 3,200 venture capital funds in the United States, and out of them, it's the top 1% that get 80% plus of the money invested into those funds. And so I discovered is that startups have a tough time raising money. Brand new venture capital funds have a very tough time raising capital. So we created the Emerging Managers podcast to interview the lesser known, newer venture capital firms or specialty venture capital firms. And, it's been great because we've learned a couple of things is that, sometimes when you're number two, you work harder. You try harder. The returns on some of these earlier stage venture capital funds are far better because they're not like this monolithic investment fund and all this staff and other things involved. They run lean and mean, and so they're profitable and they make money for their LPs and their investors, and they tend to be a little more hands-on. I think if you're a mega venture capital fund and you have hundreds or thousands of companies in your portfolio, you're not going to have enough time to give the portfolio companies enough love. But if you're a smaller fund and maybe you have 10, 20, maybe 30 companies in your portfolio, you have time to help them and give them more than just money. You can give them resources. And, we just finished, I think, our 35th for 36th interview, and it's been great. The struggle is as real for early stage venture capital funds as it is for early stage founders.
Have you found it helping out with the networking and building out your network? And
absolutely. What it's done is it's about building relationships. And we don't charge to do the podcast. We put it out to our network, and and let's be honest, if I help them, they're probably going to take my phone call at the very least. And that's been the case. But, these are folks, I've interviewed a lot of brand new folks I've never met before. And it's really interesting. And you probably realize this in your podcast, in the beginning, you're out there pounding the table, getting people to be on your podcast.
Yeah.
And now I get 15 to 20 requests, in my inbox now,
That's great.
Which is encouraging.
Very, very good. That's fantastic. We were talking about building. If you are a business owner or an entrepreneur and you've got a business, you want investors, you want to start building relationships with people. Have you encouraged some of those folks to maybe, hey, start a podcast and you can have investors come in as a guest on your show to kind of start their relationship out?
I agree. And I do, because you have to be a voice in your industry, in your community. Years ago, we had an investor on our panel, and one of the entrepreneurs asked him a question, say, how do I get in front of you? He goes, do something interesting. I'll find out about it. And yes, you do need to, because it's about getting in front of people. It's about building relationships. We've had several entrepreneurs, part of their building the relationship is saying, hey, I got a podcast. You want to be on it? So they did them a favor first, built that relationship, and then say, hey, by the way, do you mind if I talk to you about my startup? And so, yeah, absolutely. It's a great idea.
Have you ever heard of the 5 love languages?
I have.
We use that in our business because it's like a relationship tool, right? What's your wife's love language? What's your love language? We really use 4 love languages. We don't use physical touch, but we do use the other 4 love languages, words of affirmation and acts of service and gifting and all that stuff we incorporate into how we work with people, whether they're a referral partner or whether they're a client, but and that's it's an amazing tool that we've found that works so well to kind of build out that relationship, right? And to ingratiate yourself with that person so they look forward to hearing from you. It's not like, oh, Will's calling me, he's probably trying to sell me something. Will's calling me, he's probably got something good for me, whether it's a gift or whether it's a tip or whether it's, he's going to just build me up. So that's another thing that I would encourage not investors, but business owners who need investors, think about that and use those love languages. It's crazy how well it works because we're all human beings, and we all want to be, we want to be talked nice to and be told that we're great. And we want people to do things for us, and everybody likes to get a gift. So, that's a great way to and the podcast is kind of in that lane as well. So, I would hope that some of those guys do think about podcasting. It's a powerful tool. I think you found it to be a powerful tool for you.
Absolutely.
So are you doing just audio or are you doing video version of the podcast too?
We have video. We're on YouTube, all the streaming channels. We use AI to help generate blog posts that go along with it. So, so we try to do a multi-faceted approach to it.
I'm gonna check it out later today. I'm gonna go and subscribe and check out the show, man. I'm excited to see what you have going on there. Scott, this has been an awesome conversation, man. I really appreciate you giving me some time today and chatting with me and educating me on this world that I really don't know a whole lot about. I feel like I know a lot more than I did 30 minutes ago. So this has been fantastic, man. So let people know out there. We do have a lot of entrepreneurs that listen to our show. I don't know if they're looking for investors or not, but we also may have some people who listen to the show who are looking to invest. So let people know how they can find you, how to get in touch with you, and let them know where to find the podcast too.
Sure. Our corporate website is blackdogventurepartners.com. You can learn more about our pitch events at vcfastpitch.com. Our podcast is the emergingmanagerspodcast.com. And you can find me on social with the handle Black Dog CEO.
Awesome, man. I followed you earlier today. So on Instagram. So. Appreciate you coming on, man. This has been a great conversation. And those of you that are watching the podcast live right now, we appreciate you guys tuning in and checking out the show. We've got another podcast coming later this afternoon, so be sure to come back for that. If you're watching the recorded version, we do appreciate you guys checking that out, whether you're watching it on YouTube or listening on Spotify or Apple or wherever you get your podcasts. We do appreciate it. Please make sure that you subscribe to the show. Give us a rating, give us a like. Give us a thumbs up, all the stars, all that good stuff. And keep tuning in because we got more guests coming down the pipe that are going to be great, just like Scott here was. Scott, again, thank you so much, man. I really enjoyed the conversation. And I want to talk to you more and maybe have you back on here relatively soon, just kind of see how things are going.
That'd be great. My pleasure. Thanks, Will.
All right, buddy. Good talking to you. Take care.
Thanks for joining us on this episode of Partnerships for Profit. We hope you've gained valuable insights on how to form profitable partnerships and take your business to the next level. Be sure to subscribe and leave us a review wherever you listen to podcasts so you never miss an episode. Got a partnership story to share or someone you'd like to see featured on the show? Reach out to us. Until next time, keep building those partnerships for profit.